2023. That means it's Monday. And my goodness, what a week we have coming up. It will be absolutely amazing, I'm sure. And one of those weeks where I think, thank God, Ash is my trading buddy, because I think we're in for a primarily fundamentally driven week ahead, given all sorts of things going on around the place, not least of which, of course, is the banking situation. And I'll leave all of that up to Ash, I've got to tell you, because I'm just not equipped to comment on how that's all going to pan out. I know one thing, and one thing only, and that is that I think it's SBS Bank or something like that. SBS, no, it's a television station in Australia. One of those acronym has bought Credit Suisse for a bit bargain basement price. That's all I know. What it means, got absolutely no idea. As I say, I'm so glad that Ash is my trading buddy, and he'll be all over that, I'm sure, as he takes it through what that will likely mean. When I say it will be a fundamentally driven market, in my opinion, what I'm alluding to is not just the banking situation, of course. There's a whole lot more going on. You've got, well, further to the banking situation, I believe that over the weekend there were 3 or 4 central banks, the Fed led, maybe, I'll put it that way, to meet with, I think it was 4 or 5 central banks, including the Swiss National Bank, the ECB, the Canadian. I'm not sure who else was involved with that, but the purpose of the meeting was to enhance the provision of US dollar liquidity. WTF does that mean? Not sure. As I said, thank God Ash will be here to explain all that to us. What that suggests to me is that if they're going to provide more US dollar liquidity, then the US dollar should be in demand, right? We'll see. We'll see what Ash says about that. I've got no idea, guys, but that, to me, is the logical first notion that I take. But then I see things like gold going through the roof. And that's an important one. Let's start there. You've got my gold screen up, I believe. Yes, you should be. And, of course, each and every day that we trade the gold potential breakout trade. I'm not sure I want to do that today, to be honest. I'd like to see price pull back away from the high before I even considered that. Now, for those of you who are new, I don't think there's anyone new in the show actually today at the moment. In fact, we're pretty light on. PH, is that the real PH? The one and only PH who plays guitar and harmonica and sings like a thrush? He's not talking to me. His microphone's open though. Say yes or no, PH, if you wouldn't mind. Anyway, what I'm trying to get out here is anyone's new. No, I don't think there's anyone new, so I don't need to explain this. This has been on an absolute tear, of course, and if you've been trading this, you've been doing pretty well with it, or should have been doing pretty well with it. I actually, not by mistake, I removed my take profit on Thursday. And the reason for that was I had this sneaking suspicion that gold was going to rally. So I did remove my take profit, and I closed it on Saturday morning, which was a pretty good move. I also closed the euro yen and the dollar yen trades that were in short, which may not have been such a good move given what I've seen in the market thus far. Anyway, we'll get to that. Right, we've got a close of, or an open rather, of London session, and here's our range. The range to the upside, or the high, is 2009, so we've gone over the $2,000 mark, and the low is 1968. So I'm not too concerned about the $32 spread. What I am concerned about is that we're trading straight into resistance here if we do go long. And we're on a tear. Do I need to take that into consideration? Well, we haven't added any filters to this yet, have we? So the reality is that I'll have to take trade. But as always, it will be very much at minimal, even less than minimal risk. So let's set the entry. Entry is going to be the low of the range, of course, being Asia session. 1968. I was 32 years old in 1968. No, I wasn't. I was 12 years old. Goodness me. I wish my life away. 1968. I know some of you think I look like I was 32 years old, but that's not true. The high is 2010, and that will be the stop loss for the short. Take profit level, we better find that, hadn't we? Well, there's nothing up here. We know that. We're at all-time highs now. And, well, not quite. I think we went to 2100 before. Not sure. But we won't use history. We'll use I think we'll use DR2 as our level today, 2033. So that will be our take profit, 2033. And we'll place that. Oh, I got that wrong. We were going short, weren't we? Okay. What a dipstick. 1968, 2010, I needed a target to the downside. My goodness. Very slim pickings to the downside. Weekly pivot only. But that's what we'll have to set. It's going to be a very poor reward to risk. 1950. Now you're getting closer to my birth date. 1950. That's going to be our target. 1950. So the short is in place. Dreadful reward to risk. Let's go with the long, and it will be. I've got to say, guys, if I was not testing this at the moment, I wouldn't be taking this trade. Would not be taking this trade. Buy is at 2010, and the stop loss is 19. What did I say? 68. Take profit is DR2, the one that we tried before. Can't remember what that was. 2033. 2033 will do. Okay. Sorted. Right, we'll leave that one alone. What do I think will happen here today? Well, I think we're going to consolidate, frankly. But that's just me. The market's already made some moves today, primarily, the way I look at it, as continuations of the big moves on Thursday and Friday of last week. Anyway, that's gold sorted for now. I should point out to you, and I've been a gold bear for quite some time, as you will know. Now that particular scenario has changed. Why? Because what we now see, if I grab a pen from somewhere, what we now see is double top still in place, but the lower high, the significant lower high at this level here, which has been resistance, has now been taken out. So that is significant to me, and I won't be looking to trade short anytime soon on gold. Next thing that I need to see to trade gold short would be not only a lower high, which of course would be a second lower high, not a first lower high, but then a sequence of lower highs, maybe two or three, or a false break of resistance. So something like that. That's what I would need to see to go short gold now. And frankly, market conditions are not set that way at the moment. And as I said, thank God for Ash. He's going to sort out the fundamentals for me shortly, I trust. But holy dooly, mate. G'day. How was your weekend? But before I let you answer that, wow, what a week ahead we've got. There's got a whole chunk of data, in particular on Thursday, coming out with central banks all over the place, which are now being, I guess, I was going to say coerced, but not coerced, but molded or kneaded into a situation that maybe they weren't prepared for, given what's happening with central banks with banks around the world. But I believe there was a central bank meeting over the weekend, and hopefully you're across that, because I want to know what the hell it means, frankly. But we've also got not only that going on, we've got missiles flying left, right and centre in Korea, both north and south. We've got Xi Jinping meeting with Pooty, with his self-confessed best mate. That's coming up. God knows what happens there. We've got Putin on a potential arrest order by human rights. I can't remember that organisation. And we've got our good friend Donald telling us he's going to be arrested tomorrow. Wow, nothing going on, eh?
There is a lot going on, and it's difficult to know which one is the story. I mean, I think obviously the banking situation is the main story. Central banks are effectively coming out and trying to shore things up. We've had UBS buy Credit Suisse now and probably secure that situation. I wonder whether we are probably overstating the concerns. We've seen bond yields. I mean, this is the big thing. Bond yields are dropping like a rock right now. And if you think that bond yields tend to be driven by central bank expectations, central banks going higher on interest rates, then people don't buy bonds. So if they don't buy bonds, the bond yields will go up. But what's really interesting right now is that we've still got this potential for the Fed to raise interest rates 25 basis points, possibly 50, but possibly 0. And yet people are now just pouring into bonds. Same with the German 2-year. You've got the same with, like, German bonds are flying off the shelf. And you've had an ECB last week, Christine Lagarde, effectively saying there's nothing to see here. The financial system is not in too much stress. We're okay. There's a couple of things going on, but we're not in too much stress. We know that central banks understate things, as they did with inflation, and they move very, very late on inflation. So it can't really be trusted. But the fact that bond yields are dropping in that kind of environment tells us that the fear has just peaked. People are just piling into safe assets. They're buying. The reason that the bond yields are falling is because people are buying bonds, and they're not buying bonds because they think that they've hit the highest rate of inflation necessarily. They're buying bonds because they're just like, where can we put our money where it's actually going to be holding some value? Bond yields have been decent enough to sort of make them attractive places to be. But there's just a lot of concern. There's a lot of panic out there. So because of that, we are seeing bond yields fall. And that does tell us where the situation and how markets are feeling. Even though, as I say, mate, I wonder whether the banking crisis is being a little bit overstated, because we've had, in fact, let's pull up the charts, because, and this is why I say what I say. Not because I don't think it's a problem, but because this, if you look at this on a daily, this is gold on a daily. This is absolute all-out panic, bang, 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 all the way to the upside. This on the FTSE, absolute all-out panic. The DAX, not so bad actually, but there's still some panic kind of coming in here. Kakaron, same thing. The way that these things have waterfalled down and the way that gold has taken off suggests that there is panic. Now, when there's panic, there's an opportunity. And really what we're trying to now do is say, have they overvalued the problem? Because, yeah, okay, there is an issue. There's undoubtedly an issue in the banking system. Otherwise, we wouldn't have seen not the amount of banks fall, but the size of the banks start to fall. So there's obviously a problem out there. But there are also backstop mechanisms that are now being implemented, which seem to be okay. You know, the central bank has basically come out and they're adding liquidity to the banking sector. We've got banks such as UBS.
Sorry, on that very point, sorry, and I hate to interrupt you because you're in a train of thought, but on that point, and we can come back to it if you want, rather than interrupt your train of thought, providing liquidity of US dollars, am I right? Is that what they... So does that not provide us with a directional bias for the US dollar?
Well, it depends on what they're going to do next. And this is the thing, you know, if you look at the DXY, it depends what the interest rate, still at what the interest rate is going to do next. You look at the DXY and let's have a think about that over the last month, where it is over the last month. Now, this is a situation where inflation is picking up and you know, all the things haven't calmed down, so they're buying back up again. Safe asset, of course, so there's a bit of safe haven play here as well, but also trying to price in that there could be a 50 basis point rate hike. Then it starts to come down to this point. Then we get the ECB last week, which suggests that there's still inflation in the market, and they say, okay, well, maybe 25 basis points. Then we get this situation with the banks, and they're saying, well, actually, they might not raise at all because there is a problem really in the financial sector, and something that the Fed and the like can do is relieve the pressure by lowering interest rates. So what we've basically got is a situation where markets aren't able to price the dollar, and we've got a Fed meeting, you know, days away, and this is you know, probably unprecedented, really. So even though I get your point, it's still going to be about what they're going to do with interest rates, because if they pause, the dollar's probably going down. You know, if they pause on interest rates, which they may, it's unlikely, but they may. You know, the central bank's rhetoric right now is all about inflation. They seem to be ignoring, you know, the panic, you know. So they've got this two-pronged problem going on right now. Inflation is sustainably too high and they've got to fight it, and yet they are cracking the system. They did say that they were happy for a recession, but did they see the recession starting in the financial system and potentially putting that under stress? Now, the reason I think I stated last week that we've got so many problems is because a lot of these banks had bought bonds when they were very, very low yielding. And as soon as the yields started going up, then they're having to, you know, the bond prices starting to come down. So they are unable to sell their assets to shore up the liquidity. So that's where the Fed and the central banks start to come into play, adding liquidity, and they won't be the only one. But it really does depend on, do they add liquidity, you know, a significant amount of liquidity by lowering interest rates? Because if they do, or pausing at least, because if they do, then the dollar is probably going to be going in the opposite direction.
But you're not helping.
Well, I woke up this morning.
It's not you. It's the circumstance. But it's not a clear picture I'm getting. Really? No,
do you know, mate? I woke up this morning and I thought, okay, well, that UBS deal is probably going to help things out a little bit, and I bought a little bit of the FTSE. I did close a position because there was a decent little pop to the upside. It just hit this little trend line along here, and I closed the position at the top because I see actually when I'm looking at the stocks, HSBC down this morning at 4.5%. So normally I'd buy in again here. I'd be buying this, no problem at all, you know, because I think that there is probably, as I say, they're probably overstating the situation. However, the market is not at this stage in any way or any way, shape or form in agreement with me. You know, I thought we'd see a decent drive to the upside. Now I'm wondering whether we have to actually see this really significantly drop down to 7,000 back down here. So we're looking at another, well, I mean, down to 7,000 is going to be another that's another 3% move to the downside on the FTSE before we catch anything here. Actually, it's just above 7,000, so it will be around about 2.5–3% move to the downside on the FTSE through these levels, and you can the situation is panic. Now the problem is, how do you sell this here? Okay, it's not necessarily at the buy zone, but it is in a buy zone. You know, when you kind of like look along here, and you put this horizontal level here, then it actually becomes relatively good. You know, it's a relatively strong level here, so you can't sell it here. But you can't buy it just yet, because there's, you know, even though that there may well be enough to suggest that we could get a bounce relatively soon because they might have overstated. This isn't a buying opportunity at this stage, and it may not be a buying opportunity until there is some clarity on what the Fed, the Bank of England, the S&P, you know, don't forget, we've got just a slew of central banks out this week. Until they say what they're going to do, there may not be an opportunity, because so far, what they have done has not calmed the markets down. And we tend to see this quite a lot. If we think of COVID, when this started to drop here, the central banks stated that they were going to be providing quantitative easing before this started to bounce. So there may well be a situation where they've stated what's going to happen, but this needs one more leg before, you know, maybe flush some of the other sellers out, get rid of them, and then start to bounce. So I don't know whether we've got an environment to buy yet, but we are in a buy zone. So, you know, this is a buy zone. You look at gold. Gold is approaching again. Well, in fact, forget approaching. Gold is in a sell zone. You look along here. I mean, it's difficult exactly to know where this level is, but this whole band up here is a sell zone. But how do you possibly sell gold?
You can't sell, and you can't buy it.
And you can't buy it. My point is exactly the same. You can't buy it because this is way too emotive. You can't sell it because there's no reason to sell it.
You're trying to pin a cloud down there, and you're trying to catch a falling knife on the other side, right?
Exactly, mate. Exactly.
So
it's tough, and it's an impossibility. But what you can do is see if there's any small short-term opportunities, you know, and there probably will be. And the opportunity right now looks like it probably still is to the downside. But I think that there's probably going to be a few pops on the way. The NASDAQ is the one of the most interest, because if you are going to buy anything, this is the one to buy. Look how calm that is in comparison to what we've been looking at over the last week. The NASDAQ has popped to the upside and been quite happy to hold this position. Now, this may well be because they think, you know, central banks have to start pausing, because we're seeing material issues caused by interest rate hikes. So the NASDAQ traders look like they're now saying we're close. You know, we are close to the Fed pausing, and this is the one to buy. And this hasn't taken off too much either. You know, this is pretty good. This could drift down into the monthly pivot, and then at the monthly pivot, it looks like a buying opportunity.
Is it wall of worry, or is it beyond the aversion point? What do you think?
Yeah, well, I think it's not knowing the labels that well. If the wall of worry suggests it's going up from here, I'm wall of worry. Whichever I think this is going up from here. I think
past the aversion point if that's the case. Okay, the aversion point's those double lows there.
Yeah, I think this is going, mate. I think the NASDAQ's going to pop up. I think the S&P is going to pop up, and I think the FTSE is going to pop up as well, and the DAX. So this to me is a buying opportunity, but not yet. Just price-wise, it's looking attractive. You know, this here is looking attractive. For this to collapse, I think we actually need some genuine stress that can't be fixed. And I guess that's my point. I think that they've overreacted, because from what I can tell, from what I can see, there are the rescue services on the sidelines, and they're basically implementing the kiss of life that these markets, all these banking stocks that we've currently had. I think it's providing the kiss of life they probably need. So I don't think there's any major panic. I think that what we've seen over the that's my take on it, mate. That's my personal take on it. My currency pair of the week is the dollar CAD short. And
yeah, I've got an order on that. You're agreeing with
Oh,
me.
good stuff.
Good.
Yeah,
Yeah.
I do agree with you. And what I'd like to see, because I don't see enough information just yet to suggest. Now again, buy zones and sell zones. This one's in a sell zone, right up here. Last week's bar was an inside bar on the weekly that suggests some stress up here. And then we look at this, and I was talking about this in the Sunday analysis. We look at this, and what I see is two possibilities to trade it. I see a break here, getting us down to the pivot and below. And I see a Jeff setup, and this is the thing. There's no way that I would have even considered this type of setup before you and I started trading together, but I would now. And what I want to see is a break up there, and then a break back down, and then a break back up, and then I would trade this low. Then I would trade it short. That's the only way that I can trade this off the top of this channel. Otherwise, I want to see a breakdown. So one of the two has to happen. This to me is no man's land. And the reason it's no man's land is that when I look at this on the 4 hourly, what I see is a situation where this up here, why is that doing that? This up here is the high, then I get my lower high, then I get a higher high. So this tells me there's a pattern. This doesn't really know what it's doing. Bang up there. Now we got a lower high, probably lower highs going on here. Fair enough. But this is telling me there's a pattern. This particular area here is telling me there's a pattern, and that means that I either need to see a break and a retest of the pattern from the inside, or a breakdown of the pattern before I can trade it. So I like it, but I don't have a trade at this stage. Now, if you think about what could drive this market, central banks. We got the Fed out on Thursday. Are people going to be trading the dollar short before Thursday? Maybe, but the only reason they would do that is if they're speculating that the interest rate hike or non-hike is favorable for a weaker dollar. And at this stage, you look at this market and it's basically saying, we don't know.
Exactly. You're in a, what do you call those things, you guys? Equilateral triangle or something.
Yeah. Well,
you're in a wedge pattern that's telling you nothing at the end of the day. I'll give you one more scenario. If you go to the daily chart, tell me what your most significant horizontal level is close to the market.
Okay, let me just have a look at one. Let me have a look at a few here and see what we got. This one here, actually.
Yep,
this is my yeah, which also breaks down this pattern.
But you have a look at my pattern where it broke out of that level, right? That horizontal level.
Yeah.
It's come back underneath it and it's retested it.
Yeah.
So where do you think I've got my entry?
Underneath here.
Correct. Well, underneath the biggest bull bar. Yeah.
Well, you would be entering in the same place as me,
yes.
give or take a few pips. So we're basically looking for a slightly different pattern, but the same price and the same break. So I like it, mate. And when I look at this, my measured move on this would be this pattern. So if this does break down, that would suggest below the monthly pivot, which says that the monthly pivot is a fair target. There's also, and as I was saying in the Sunday show, there are opportunities here for traders that trade 1-to-1. They trade 2-to-1 and possibly beyond if you think it's going to break down. But I think there's a genuine opportunity on the dollar CAD. But things have to shape up. Incidentally,
they do, of course, as always. But if you look at the bigger picture, you can either go wider on that chart or you can go to the weekly.
Yeah.
If that actually plays out, there's a cycle or sequence there that suggests that we're going back down to the first break. You see that big breakout level?
This one here.
There.
Yeah.
Suggests we're going to there.
Yeah. Yeah. Which again would add those polar bears right into the market here, because the polar bears will probably be looking for maybe an 80 pip stop, and that's going to get you 500. So you're looking at a 4-to-1 there.
That's why I like the trade.
Yeah, I think you're right, mate. Actually, it's bigger than a 4-to-1. Yeah, I like it too, mate. I think it's a decent thing to look for. But as I say, the question really does come in: does the market help out? Now, the other thing to note about this is the dollar is seasonally going into the end of March, the weakest of all currencies, and the CAD, along with the pound, to be fair, but the CAD is the one that's up there. The CAD is the strongest of the currencies going into the end of March and into April. If you look at April over the 20-year period, Lloyd and I were doing this yesterday. Look at April, the 20-year period, the 10-year period, and the 5-year period. The dollar CAD short is April's the best month to short that particular currency pair. So there's quite a lot of evidence which suggests not only do we go through it, but we could actually expand, as you say, down to this area, particularly if we haven't got there before we head into April.
Yep, that completes that cycle down to there, in my opinion, anyway. Well, I mean, as you say, there's a lot can happen this week that can change that. There's no question from a fundamental perspective. And I do believe that we've really got to take consideration of the fundamentals at the moment, because they're so strong and they're so frequent. They're just piling up on top of the other, one upon the other. The banks, as I said, Xi Jinping's meeting with Putin. Putin's going to be arrested, according to the human rights people, for war crimes. Donald Trump's going into jail. No, he won't. But by his own admission, he's getting arrested tomorrow, right? And what that means, not so much the arrest itself. There's potential here for another one of those dreadful occurrences that we saw when his supporters invaded the bloody capital, right?
Possibly.
Well, they're supposed to be surrounding his mansion at what's it called, Mar-a-Lago, or wherever. To stop the feds coming to arrest him. That's not going to end well either, if that turns out. So I don't know. There's a whole mess going on. But the banks, if that's resolved, then I think that eases the pressure a little bit. But then we come into all the data releases that are coming up during the week, and that's going to move the market as well. So look, really interesting week. And I think fundamentals need to be very much in your mind as you look to trade. That's what I believe anyway. George has joined us. Hello, mate.
How are you gents doing?
Oh, mate, we're all excited. We're on top of the fence, waiting for a little bit of direction. Maybe you can give us some.
Well, let's see. Well, first I need to be given powers.
Oh man, I've got to relinquish this.
Which powers, like Putin?
This controller situation drives me nuts.
Whoever is more powerful, give me their powers.
That's Donald, apparently.
Is it?
He's
Donald?
on the way back.
I'll take Donald's for now. All right. So, I mean, from a price action perspective, it's interesting. The more I spend time with you gents on this show, I can see, playing out at the back of my head how the fundamentals are clearly reflected in what's on the charts. Fully baked, partly baked, still to be baked in, whatever the case may be. But let's see the story that's on the daily in terms of the price action. We kind of spoke about starting with Hang Seng 50. We spoke about this pattern, and I think all of them except gold. Well, the way except gold is going the other way, and I spoke about one of our crystal clear patterns from price action perspective is when you see a first leg of a move. After a pullback, expect there to be an equidistance move. So, we spoke about this first leg pullback, second leg. If I'm saying we spoke about it, it wasn't you guys. It's probably some of the guys in the Wednesdays at the market where we're digging into it, but somewhere within there. But I'm sure I would have touched on it. So there was a breakout and there was a channel, and then previous week we had this huge bear breakout. Now, I spent a lot of time trying to get into the trades here. And then I said to the guys, if you miss a trade anywhere in here, or if you've lost money, it really doesn't matter, because a higher probability, and we're talking, I'm always thinking 60% at least, but it could be more, 70, 80. If the bears are strong, after that move, there will be a second leg. So you got to be, going into the market to try and find ways to sell. So from this chart, I think there's a lot more selling still to happen. Hang Seng,
that's a wonderful bear trap up there, isn't it? Really? Wow. Bull trap, right?
Bull trap, yeah. So this big round number 18,000. If you jumped in here, unless you're quick enough, you should have exited. And we've just we tested this 19,000, broke through it. There's a bit of a pullback. I don't typically trade beyond 11 a.m. UK, which is 1 p.m. my time on Fridays. But this past Friday, set my stops in the market, and I've got commitments I got to do. Friday is only time I can take the missus out in the afternoon, pick up the child, do all of that. And I
do that too, George. I go to the local pub, we have 2 beers and drive back home and have pizza and a couple of wines. That's Friday for me. So that's commitment for you, right?
No, it is. You've got to stick to those commitments. And I always have a choice. Do I exit and just bank in this case, or do I live? So I took the call. I'm going to live it because everything is set up. And, we've just gone past midday, and I think there's a little bit more momentum. And I was in all the markets, which is very rare. So all of these, I was in UK, Hang Seng, gold, long, S&P and Euro Yen, all shorts except for gold was longs. And I got rewarded pretty nicely. I came back just for
that sounds pretty cool if you're in all those.
Yeah. And I just said, well, I'm not going to stay. It's Friday. Now I'm really pushing my luck at home here. So before, just as US markets are opening, closed and left it. So I'm still looking to go short. I'm not short because I closed my trades. And today I didn't get up and trade Hang Seng, but I'm looking to go short. I think there's a lot more room here because of this structure. So the structure is what reflects the mood in the market, and that's what I want to follow. If that makes sense, those are the probabilities I want to follow. So I think there's a little bit more down here. These magnets, there's a lot of things that can pull the market down. Low of December 2022. I mean, right there, we've got a measured move of this breakout, this trading range here. So this trading range here, March, that one, that pulled back into the beginning of March and that huge sell-off. The measured move of breaking beneath that is here. And if you look to the left, this is where the bulls showed strength. So the bears, if they're strong this side, they're going to take this out. But it's not going to be just randomly taking out levels. This low of December, that measured move. And then this big round number here, 18,000, is going to be a big one for the bears to get through. I think that's where there will be a bit of stalling of momentum, and maybe we'll get a deeper pullback. And we'll have to see if the bears are strong enough to break and try and come down here. But my initial target is here. The other thing I'm also looking at is, because this is a daily, and that's giving me the higher time frame. I think it was Ash who asked last week about, does it daily influence your decision, your thinking? So if I was trading the daily, I'm always asking myself, where would I be making money and where would I be taking profits? So if for any reason I had taken a trade here, and I'm kind of thinking, well, this is a good trade, let me hold and see, trailing my stop down. This would have been the first pullback, right? To kind of pull my stop down to, and then I'll be holding short to see how much more I can make out of it. As a daily trader, I really would be looking at the same thing: leg one, pullback, leg two. The bears are strong, measured moves. So I think there's enough momentum pushing probabilities in favor of a bit more shorting in that market. You just have to wait to get it. UK 100. This I think there's a lot more bad news coming in this market. And let me explain it from. Just keep the structure that you had in mind on Hang Seng 50. Breakout, decent enough channel, some pullbacks. If you just look at this market, the first slew of big bear trend candles we've had in forever. It just, maybe you could compare to that, but that had tails and stuff on top. So the bears are pretty strong, and they are pretty strong in terms
George,
of breaking
again,
out.
I don't want to interrupt your train of
Yes.
thought, but I noticed this on the S&P when I was looking at it today.
Yeah.
The comparison between the size of the bars with everything that went up, right, for the longest time, to the size of the bars down.
Yeah, is that my Wi-Fi that's gone?
No, that was Jeff. Jeff, you broke up there, mate.
Jeff.
You still there?
Right, okay.
No, he's not.
So he's talking about the comparison of the bars. He may come back and then we'll let him speak.
Yeah. I think his point was going to be the size of the bars coming down and the fact that they close at the low of their body, and the ones going up that have the tails. Does that add significance and tell you sort of the strength of the market in that direction? I think that's what he was probably going to say.
Yeah, I think that's it. It definitely does. So, I mean, when you look at this is S&P 500, but when you look at it going back, we have had some bear candles of that kind of size going back, as compared to what we've just seen on UK 100. But definitely the size of the candles, the structure of the candles, I'm looking, if I've got dodges going up, there's tails on top, tails below, and also tails on top, tails below coming down, then it tells me that this whole picture is trading range behavior. So when the market is going up and there's two-sided price action, it's evidence of trading range behavior. In other words, it's not a strong breakout. It may go up for quite a bit. Then when it comes down again, it just means we're still in a trading range. So I can expect most breakouts to fail. So if I have a look at S&P 500 at the present moment, if you have a look at the tails, I mean, we've had tails here, tails, two-sided price action, two-sided price action, two-sided price action. So even if we get down here, look at this. This is end of December, trading range behavior. If we get down here, which we're likely to get to, because of the structure of what I'm seeing up and down, I'm not expecting any breakout here to be successful. Okay, that's where the measured moves are telling me, but I'm expecting more two-sided price action. This is S&P 500. Simply just by having a look at it again, up, down, but trading range behavior. No one is showing definitive strength. Whereas if I go to UK 100, I mean, that sell-off is significantly stronger than the market going up. The size of the candles, they are fuller candles, there's less tails on them, and they are the biggest bear candles we've had in a long time. So
can you hear me?
I think
yeah, we got you, mate.
We lost you for a bit. Yeah.
Sorry, that was exactly the point I was making. So you've just confirmed what I was thinking, mate. That's incredible difference when you look at that. Talk about, up by the staircase, down by the elevator. That's exactly what we're seeing, right?
Yeah. So then, I mean, when I look at this, it's quite a few things there, but I'll move them around so we can see. I mean, that first breakout from when the bears broke beneath these two candles, the measured move of just the bodies of that breakout, is in this range here, and that level is pretty significant for price action, but that's the midpoint of the whole of 2022 range. So everyone's keen to control that, right? The bears want to smash below it, pull back, test it, and keep selling. Bulls want the market to stay above that. So, no surprise that we're getting a bit of buying back in. So that if I was a bear selling, selling down here, I would have been saying I'm going to hold on to my shorts until I get to that level, because there's a key level, take some profits, and then we'll see whatever happens after that. Now, beyond that, because of the strength of that breakout, some bears, depending on how they got in, might be taking profits. Other guys will say, well, I'm just going to hold my trades at, what's the key level for now. I can put my stop here because I think the breakout is actually in two parts. This is one leg subdivided into two parts by that pause. So if I'm thinking breakout pullback, then as a bear, I might be thinking there's a little bit more selling to get all the way down here. So I won't mind any kind of pullback. If I've sold here and I'm holding my stop here, maybe I'll get a double top, whatever the case may be, because I'm thinking that's strong enough. So when I go into the market, these levels will appear on my 5-minute chart, all of these that I've got here. Then I've got to be looking to say there's a little bit more selling to take place, but I'm aware that there's profit taking that's going to take place as a key level here. So, if I get a buy pattern, happy to buy. There'll be enough move for me to buy, but I'm always aware that if I start to get to these levels on the daily, I've really got to be looking to sell. So my thinking into last week was there's possibly a second leg that's going to start from all these leg 1, leg 2, try and sell in here. This could be possibly, like Friday, this was classic. It's a rare, less than 5% of the days do I get into any of these trades before the key markets open. So UK 100 typically I want to get in now at the London Stock Exchange. S&P 500 the same, but because I was seeing the potential, the probability of a leg 2, I went in early, just put a wide stop in the market and said, well, let's see what happens. I think I only got stopped out on 1 euro yen. I got stopped out as it broke above the high previous day. But then I went in again on that trade because of the structure. But everything else held until the market sold off. So I think there's a little bit more selling still on here. This is a key level. If the bulls are strong, then they've got to at least reverse back all the way to take out the low of Friday and close above it, whether it's still a bad doji or whatever, it doesn't matter. But they've got to reverse the market. If they just test and close there, then we must expect a little bit more selling. Gold was another one that I took a trade early on in the Asian session. Gold doesn't have a really open for it. It just depends on the structures, but I put a wide stop in it. And the reason for that was this converging triangle. So again, one of those structures, which I think whichever way you are trading, if you see these, you've got to be thinking, hang on a second, leg 1 equals leg 2. And even if you can really set it, try and put it in. First leg, there is a pullback. Where is the market likely to go? There was a measured move, got above that. So here, decent enough pattern, spike channel, that ended at a measured move. Sometimes you get these classics, right? Channel, classics, reversal. You're looking to buy. If this was happening on a 5-minute time frame, I would be buying here with a measured move stop there, expecting there to be a pullback, right? Because breakout pullback. If you don't get in there, you get in here. Same deal. It just depends. Sometimes you don't get it, it just goes up. But if you didn't get here, you got to buy here. Put your measured move stop down, one step to side, tighten. Then you get rewarded with a breakout and follow through. How many times, Jeff, do we say, get the breakout, get the follow through, wait for the pullback, higher low. And there you get rewarded.
It's a song, George, right? It's a new song.
It's exactly a new song. And when it happens, you gotta, wipe your eyes and say, is it really happening? It is happening. Close your eyes.
Exactly. The ones that you don't take, you think, what on earth wasn't I thinking? Why didn't I take that? Because it's so frequent. It's amazing
when it happens. So when I saw that pullback, converging triangle, breakout, pullback, I knew we we're going to accelerate, higher probability, 60%, sometimes it's more, and took a trade early on, just hold. And I got out, I think, somewhere in here, unfortunately, when I said this end of Friday, it's a little bit more, but I was been rewarded quite nicely. Now, point is, where is this market likely to go? You got to look at it a couple of different ways. where we are today, if you look at that leg one, pull back leg two, we are at the measured move. And that measured move is at 2000. It was interesting. I was talking to guys and I was saying, what are the chances we're down here? Gold's going to get to 2000 and everyone's going to say, oh, gold is at 2000 in the news. But the price action was telling us that there's a probability that, that big round number, if we take out this one, that's where the market may go. And we've got to it. And so sometimes it's while your stomach is churning, you got to take the trade. If you're trading on the daily, which I'm not, you would have been holding on to the trade, hoping that you get a higher low, that it doesn't reverse. And when you get the higher low, then your stop would have been here. Then the next trade that one of the patterns is break off a converging triangle. You have been buying above there. And as it goes up, pull your stop and then just wait to see what happens. So we are at the measured move at 2000, big round number. You can take your profits and bank them, or, if you have the courage, just hold on and see if a pullback happens to get to this level. Now, why would we want to get to this level, the 2-1 level? Because what the bulls would be thinking is, hang on, if all the bulls are strong enough, there is, if you look at that, there is our next breakout point, that high, that weight of March. If we break out above that, which we did on Friday, but we need to have follow through. So today can't be a doji or a pullback. At the very least, they need to close above the 2000 level. If they're able to do that, even if we get a pullback into the week because of news, whatever the case may be, the bulls are saying that's where we want to go. We want to take the all-time high and you want to take that. And if you're holding on to a trade, you're just going to have to wait for a higher low, double bottom to move your stop to and continue buying. Or if you're not in a trade, buying here is problematic because you've got to put your stop here. Rather wait to see if you get a pullback and then take that trade, and you can find ways to take your stop. So I think for gold, the higher probabilities favor us getting to that level because of this breakout and what happens today. If they can just close a little bit above the 2000 level, a doji creates a problem, then we have to wait. This doji is quite problematic. I know we got into measured moves, but you don't want trading range behavior when the bulls are on a rampage, right? I just made that up. That sounds quite nice. You don't want trading range behavior when the bulls are on a rampage. I'll write that down somewhere.
The running of the bulls.
Yeah.
Spanish, right?
So that one bar doji, some time back I said, whenever we see a one bar doji, always put the measured move because that market tends to get there. So we've got, multiple levels. We got to that one bar doji. Okay, so that trading range, the trading range forces here and up here. So pullback, profit taking, whatever causes, really doesn't matter. We've also got, this present high. Why is that shifted? Okay, so there is a high of 2023. So many factors here that encourage the bears to come in. If they're strong, they have to all plow in now to reverse the market, below this key level. Finally, I put a currency pair up. We started off as currency traders, so I like to do that. Why would I have been selling short on Friday? Selling short. I think you always sell short. Why would I have been selling on Friday? Well, this huge bear candle, it created a lower high double top. So there's all these double tops here, but it wasn't like that. Failed breakout, and then we're selling off, testing a channel. This is off on the monthly channel, but the goal is to get here. Then when I get that low test candle in a trading range, and we come back to test the breakout point, I thought, well, good opportunity for the bears to sell. They're not going to go far, because I thought they were only going to go try and get below this channel here, which you could see on the monthly. There is a channel there that I had on the monthly. So that's, sorry, my voice is kind of. So went in to sell that and got out somewhere it is slow there. So I think, the level here is where the bulls are likely to come. If the bears sell off, they're going to have a challenge down here. So that's just kind of view. I don't know why my voice is disappearing, James. That's a present view.
Baileys and cream, or Baileys and milk will fix that.
I think as long as there's Baileys in, that's going to be the solution. So that's presently what I'm looking at.
Depends if you're going to trade anymore today or not. Simple as that.
No, today I'm not trading. It's tomorrow is a public holiday, so today kids are supposed to be at school, but we have the opposition in parliament on a strike because of all the electricity power cuts. And strikes in South Africa are beautiful. They're burning tires, throwing rubbish in the street. So the kid is not going to school. They're all here. So I'm going to take a break after this and just relax with them.
Yeah, I think it might be a very good day to have a break.
Tomorrow.
Yeah, I mean, just allow those pullbacks to happen, right? So that you get a little bit more clarity. That's
that's what it is going to be about now, isn't it? It's just sort of like, what's the market going to give us? We haven't really got that much today that when it comes down to announcements, unless they kind of blindside us with something to do with the banks, which they could. We do have Christine Lagarde out later today, so she might say something. I mean, that's around 2:00 UK time. She might say something to drive these markets, because the story is going to be about the banks right now, the financial system. If she comes out and she just reiterates what she said last week, it's not good for the market, because she's basically said, forget it. We are fighting inflation. That is our mandate, and that's what we're going to do. If she continues on that line, I can't really see the market really having too much help. Then tomorrow we've got now this is where the CAD gets interesting. This is really for you, Jeff. CPI data from Canada. The BOC has been one of the first central banks to pause on interest rates, but a hike up in some CPI data, that's not going to be too good for the market, but it probably will be good for the CAD. So we're looking at the CAD tomorrow. Is it the CAD that drives that dollar CAD, or is it the dollar that drives that dollar CAD? CPI in Canada has been easing back just a little bit. In February, it was 5.4% from 5.9%. So if that sort of like starts coming down a bit, we might see a little bit of dollar strength in the dollar CAD pair. But that's not the story, of course. The story is going to be about interest rates and the like. CPI and inflation data from the UK on Wednesday could have a big telling on whether the pound might well be the strongest currency of the week. If that CPI data in the UK has not been very healthy at all. In fact, it's been too healthy in many respects, way too close to 10%, and probably a anticipation that not only will the central banks raise, but they might have to say something hawkish, which is unlikely, to be fair, because they're not a very the actions had to be hawkish, but actually the rhetoric hasn't been particularly hawkish, and they are going to be more than most affected by the financial sector, because the UK's economy is so driven by the financial sector. So the BOE might actually flip this all around. We might get high CPI data, everybody buys into the pound, the BOE come out in a press conference and say we're kind of done here, and the pound might flip around. I'm not saying that's going to happen, but there's a possibility that could obviously happen. And then of course, when we get to Thursday, it is Wednesday. We got the Fed as well. Wednesday, late on Wednesday, projected to go to 5%. Again, they could say something which might drive the markets, and that will probably be dollar CAD either trigger time or to see that trade go. It's going to be difficult when you're in that trade before that announcement. I think almost better to stay in the range before we get to that announcement. But which might well happen if the CAD, if the CPI data from Canada is weaker, we might actually see just that position not be able to get triggered in until we get the Fed out on Wednesday. So we get the Fed Wednesday, Thursday S&B rate decision, which is scheduled and forecast to be at the same price at 1%. Does that weaken the Swissy? If the financial system sees an easing of pressure because the central banks come out, or we see sort of, no more news on the banking sector, we might actually see a lower Swissy this week if the central bank stays where they
under
are.
Pressure, surely got to be under pressure.
It will be, mate, but do you know where it won't be? If there's panic. If there's panic, of course, then we start to edge towards the Swissy and the yen again. But if there's just an
risk off, yes,
yeah,
and so we may even be there now.
We might be getting close. I think today, I agree with George. I think there's some more downside. I'd quite like to see that downside flush out early week and then start to pick it up, because I'm pretty bullish on these stocks. Really, not necessarily because of what we got right now, just because I think we're getting close to a buy zone. But that buy zone probably is probably at the top end, and I'd prefer to see it at the bottom end. So one more flush down would be of use. And then, in fact, to say I'm bullish is probably overstating. I'd like to buy. I'm not particularly bullish, but I'd like to buy because I think the price is getting attractive for a bounce. So yeah, we got all that. Thursday we got the Bank of England, which as I say, might actually turn the pound round a bit. Traditionally, after a rate hike, there tends to be some weakness in a currency. So that's another thing to kind of come into play here. Not always, but a lot of the times we see a weakness in the currency because the chances could be that that's the end of the hiking cycle. So that might be the last one, which means that we're ready to reprice. So we might start to see the pound come down as well. And then Friday is some more FOMC meetings and all this kind of thing, and a few numbers from Canada. But I think all of the shouting will probably be done by Thursday. But it's a big week, not one to be missed in some respects, but maybe one also to take off. It's going to be a tricky balance, I think, for a lot of traders.
Well, sorry, Jeff, go ahead.
You're right, George. You go, mate.
And I was saying, I kind of say the Hang Seng 50 is my bread and butter, because when I get up like tomorrow, I'm just going to start to trade it. But besides that, the other markets, I mean, as you spot on, all I'm going to be doing is open, either look at it end of the day or first in the morning. I mean, if I see a huge bear candle here on gold, for example, then I'm going to go in and start to look to short. If I see a bull candle, I'm going to go in and look to buy. So in other words, on the other markets that I don't just get into to trade every day, I have to see whether we have a significant reversal that's been created. That's, if we get a huge bear candle, let's say I come back and I see a huge bull candle on gold, I'm not going to buy, because then I'm worried, it's a little bit high. I want to wait for a pullback. Why risk it on intraday until I come back and see a pullback? So whatever is being spoken of, said, what is going to reflect in some huge reversal pattern or continuation, then I'll jump in. The only thing I'm going to look at least the first session, I always find opportunity in Hang Seng 50, but everything else, I got to wait to see something decisive reflected on the daily bars.
I really like that, mate. And I think it's the same for me, and it's the same for Jeff as well. I think that we've all got a favoured market that we would be able to just take just some bites out of, no matter the condition. Mine's the FTSE. I think Jeff's the euro dollar. But there are others, when you look at them, the charts have to do something different in a way. With the Hang Seng, it's probably, and with the FTSE for me, it doesn't matter which direction it's going in. I could probably take a little bite out of it, but I don't know that the other markets quite as well, and I'm not quite as familiar. So I have to see something specific on the chart, but I have to almost follow something more systematic, is probably a good way to put it, with those other markets. So having a market that you're really familiar with, it's quite a good way. It's quite a good bounce point, isn't it? Because when things aren't shaping up, you go back to your old favorite, and you can probably sort of get something out of that, even though it's not the exact pattern that you would trade. Every single time, you can sort of be a bit more flexible. So I really like that.
Instinctive, yes,
is the word. Yeah. It's the same for me with the FTSE. I trade the FTSE long just for a little bite out of it this morning. but it's not a market that I should be going long at by any stretch. The others I wouldn't be counter trend trading because I just don't understand them well enough.
But you do have to earn your stripes on that. Exactly right. You know, you can't not have a great familiarity with a cross or an asset or whatever it is. You've got to have that relationship with that before you can adopt that instinctive attitude or that instinctive impulse, if you like. And that's what it is. You know, it becomes an impulse, but it's based on research, stuff that you've done before, you know, because you've seen it 1,000 times before, and you just have that instinct to say, right, this is not perfect, but I've seen it 1,000 times before, so I'm going to take a little position based on that.
Yeah.
Yeah.
I mean,
And that's okay. It's perfectly okay.
I think you're right, because when it comes down to it, every single market has got specific patterns that it displays more than the others. But there are sort of general and universal chart patterns that come up in every market, and I think that's what it is with these things. Is that particularly with the FTSE, that there's certain things that it will tend to churn out. And they will still have a chance of winning, and it's not necessarily a high probability or a shot. Like Monday, opening up on a Monday. It's got a decent chance after a big sell-off of bouncing. That's just the first thing that I always sort of would be drawn towards. But only bouncing necessary to a level of resistance. But if it's at a low point, then it's something that you can buy with a very weak pattern, on a very short time frame. So it is, you're right, mate. It's things like that. They've got an anatomy, these markets, and it's really good, I think, to get familiar with one, really good, and then start
100%.
to use your chart reading knowledge to kind of trade the others. But I think George's point about waiting for a clearer signal with those other ones is so it's actually a really significant point that probably shouldn't be discarded, too freely. It's actually quite a significant thing, and I think that's something that really professional traders are probably, if you're going to move into that particular zone, that's probably what you should be trying to do. Get really familiar with one. That's the chart, your main chart up all the time, but understand your triggers, that good triggers that you could trade any other market off as well.
Yeah, I think that's probably the key, is that basket of strategies, if you like, that I can trade off any other market. So, I mean, for me, that filtering just stops me from getting cluttered. If it hasn't, don't have a decent enough setup on the UK 100 on the daily, I'm not going to bother. Okay?
Yeah.
But so, I mean, if you ever look at it, I'll be keen to trade the UK 100 here, but I wouldn't trade it here. But I'll trade the Hang Seng here because I know, what did Jeff say, the nuances of that market. I know that's my craftsmanship. That's what makes his job interesting and exciting. No matter what it throws at me, I'm happy to trade that. Everything else, once this is set up, when I go in to trade it, I don't know what it's going to bring, but I know it's going to bring any of the chart patterns that I trade here. Then I can trade them there. But I've just filtered it off. I'm only going in when there's decent setups, if that makes sense.
Yes. Yeah.
Reminds me of Julie Andrews, guys.
Don't sing.
Can I hum?
I don't think so.
It's when the dog bites and when the bee stings.
Yeah, you're absolutely right, mate. Yeah.
And you're feeling sad, right?
Yeah. Yeah.
You simply remember your favourite things.
No, I hope if that qualifies as a rap, we're in trouble.
I'm in trouble again. Oh,
yeah.
SH1T happens. I'm going to show you a couple of my favourite things before we wrap it up, okay?
Great stuff.
And George, you and I must have been channeling each other last week, I suspect. Euro yen. We traded Euro yen. As you pointed out, George, there was a clear false break happening here. on euro yen as it went to the high side. Again, probably a bull trap. But it set up beautifully for me because it came back below the trade line and then retested not only the trade line, but the monthly pivot, as I pointed out at the time, double crossed it. And that was a clear entry for us here. Stop loss was here. On Saturday morning, I woke up and price was pretty much where it is or where it closed. And when I saw that weekend coming, a little bit of a tweezer bottom sitting here, I thought, I'm getting out. So I did. Got out. That may or may not have been a good decision because it's gone lower today, but I'm okay with that. Maybe I've left a little bit on the table. We'll see. I was anticipating if this was to go again that I might get a second opportunity, and I might. But at the end of the day, we're at a strong support level, so I'm expecting a bounce here as well. And hello, dollar yen. This is just such a wonderful thing to see, to making money on dollar yen, because I hate the bloody thing and it takes money off me regularly. So we actually got this on Thursday as well. I told you about this one, guys, where we had placed an order short, exactly the same trade. And again, these are my favorite things because this is a false break, but this time of a horizontal level. I didn't have a clear picture here because I didn't have a swing high to gauge my false break off, but I did have this horizontal level running through here, which was quite clear. So again, breakout, consolidation, back below, retest, enter underneath the retest bar, stop loss here. And again, it was a double cross on the monthly pivot. These are my favorite things when I see those, when they set up. They're absolutely gold. And when they're a confluence of false break and retest, happy days. Again, Saturday morning, I woke up and price was here and I closed the trade, hoping for another opportunity to get into it. But I don't care about dollar yen. If I've made money on dollar yen, I'm happy. So that's a good thing. The other one was gold. I was also in gold, George, and this was courtesy of our breakout trades that we've been trading, where we got into this on Thursday, which was here. We traded this breakout. And I kind of thought that this was on the way. So I actually removed my take profit level, which was, I can't remember, around here somewhere, and just let it run. And again, Saturday morning, woke up, closed it pretty much on the high. But that looks like it wanted to go again as well. That was last week. This week, I don't have any such setups. But what I do have is a thought process. And they are surrounded with yen pairs. And I spoke about risk on, risk off before. And I think there are two opportunities here. Let me get rid of that order box. I hate it. There are two opportunities here this week if you pay attention to the price action. One's Kiwi yen. Kiwi yen because it's a structure that I like. We've got pretty much a box range here. And if you can't see that, I'll point it out for you. So you join all the highs, come down. You join all the lows, and you get a box range. So we've already bounced off the bottom of that. If you go to the daily chart, you can see that far more clearly. Already bounced off the bottom of that. So what I'm looking for here is a higher low to trade back towards the top of the range. It's a mess of candles at the moment. I've got to say, as I'm talking about that entry, and as price disappears, that's excellent. It may create, it's not there yet, but it may create a support, trade line. And if this is the case, and I pointed out to you two options or two examples of false breaks. What I would like to see is price break here, even match that low, doesn't matter, or create a higher low, doesn't matter. Then come back above the trade line, then retest it. Then I can enter here, looking for the top of that range. That's Kiwi. And the other one, and that would be a clear indication that the market has not gone risk off, but gone risk on, because you're then trading a risk on currency, the Kiwi, versus a risk off currency, the yen. The other one is Aussie yen, which is exactly the same scenario. You've got a risk on currency versus a risk off currency. So if you're fortunate enough to be able to gauge, pardon me, the market sentiment, then I think you've got a very, very strong opportunity of trading these pairs. You've got Aussie yen at a significant low. If you draw a level across here, you'll find, I don't know, that rectangle's still there, sorry. If I've got an Aussie yen chart, don't think I have. But you can see...
Oh, sorry, mate, I'm going to have to shoot off. I've got Paul asking me to go to a quick meeting with him.
All right, mate.
All right.
Have a good week.
Thanks, guys. Yeah, you too. I'll see you Thursday.
All right, mate. So you can see Aussie yen is at a, I'll call it a significant, this is the weekly chart we're looking at, right? Significant support level. And again, we've had a rejection of that with last week's candle. Daily chart. Again, lots of lows here suggesting that this level is strong. And if we don't, even if we do break through it and come back above those lows and produce a higher low, there you go. There's that song again, George. If we produce a higher low in here, then I'd be more than happy to trade this back to this level, up around the 91 mark. So they're the two ideas that I've got going on, based on two things. One is market structure. The other is market sentiment. And if both of those things come together, then I think you're going to have sound opportunity to trade both of those long. If the market sentiment, of course, goes to risk off, then so will those opportunities. They won't be even evident because price will just break these lows. Pretty much that simple. Talking about my other edge, which of course is euro versus the dollar on the 30-minute chart. Well, that's gone already today because that revolves around the daily pivot test. But what I can say to you, let me get rid of that. What I can say to you is I can probably draw that line through here as well. I haven't done this, but it looks pretty okay. No, it's rabid. It's all over the place. That there is a little bit more significant. That may preclude me from taking the trade. What I was going to suggest to you, and you remember with both those euro yen and dollar yen trades that we were trading a false break of a level. This is a false break of a very, very weak level, but it is also a break and retest of the pivots, which suggests to me there's going to be some downside if price comes back to here. And that's only a cause and effect thing. It's an if. It's not a, okay, I'm suggesting it will. But if price comes back to here, then I think we're going to see a challenge of the lows. We've also got a break and retest of this trade line, probably this one. No, not there yet. No, okay, I'll cancel what I just was about to say. But that level there has been broken and retested. What I'm talking about is a double cross here. Double cross because it's crossed twice with both decisive candles. But the inference is more than the pattern, right? The inference is that if the bears are in control here, this double cross is for the bulls. So the bulls are being double crossed here. What does that mean? It means they're being led to believe that they're going long here because you've got a strong bull bar. And I'm suggesting that if this double cross works, the bulls are being double crossed and the price is going short. That's what that means, right? So it's a double cross of the pivots with both decisive bars, exactly as we saw on euro yen and dollar yen. Euro yen here, dollar yen here. Far more evident, right? Break, retest, double cross of the monthly pivot. That's what I'm talking about. Would I hang my hat on that today? No. And the reason I wouldn't is because it doesn't line up with anything else. There's no great confluence there apart from that trend line break and retest. Your reward to risk is very poor as well because you're trading straight into that horizontal level. So I wouldn't consider taking that, but keep your eye on it just to see exactly what happens, because these are pretty good indicators. If price goes to the bottom again, it goes short. Okay, that's me for the day, I believe. I don't think I want to talk about anything else. No, all good. George, yourself?
I'm all good. I'm seeing the guys at the open show Wednesdays, 15 minutes on a live trading profits, 6:30 p.m. Singapore. And then the guys on the subscription, we are trading Hang Seng 50. And also now we trade middle of the day, 11 a.m. UK time, which is 7 p.m. Singapore for 2.5 hours. So a lot more opportunities than just waiting for the US Open. That's for Wednesdays at the market.
There you go. So, plenty of opportunities to see George throughout the week. And, of course, you can catch Ash and myself on Thursday. Catherine, sorry, I was going to answer your question. Well, it wasn't a question, really. It was just an indication that you missed the gold breakout on Friday. Look, I think there's going to be far more opportunities on gold than what we just witnessed. Whether that's long or short at the moment is the question. I'm not 100% sure on that, to be fair. But it does. I think once it breaks 2,000 and retests 2,000, then it's probably lookout time. At the moment, we've had that significant lower high taken out on the weekly chart. I'll show you that if you weren't here earlier. That's significant to me, but I would expect that to be retested at some stage as well, because it's not just that lower high. There's a significant horizontal level there as well, which is basically the 2,000 or just below 2,000. It's about 1960 or something like that. So I would expect that to be retested, whether that's today, tomorrow, or next Calathumpian day. I wouldn't have a clue, but I would expect that to be retested at some stage. And it's at that point where I think the market will tell you what's going to happen. Right now, as we said before, impossible to buy, impossible to sell. It's an NLNS scenario. No long, no short. Okay. Thanks, Catherine. George, thanks, mate. Those of you who are able, catch George on Wednesday. And as I said, you catch Ash and myself on Trading Buddies again on Thursday. Have a great week ahead. And, wow, stay lucid with all those announcements coming up. Could be a very, very interesting week. Have a great week. Bye-bye for now. See ya.